Alright, good afternoon everybody. Sorry for the little delay. Let's jump on in. Someone say hello so I know that you guys can hear me. There we go. Thanks, Jim. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. It's basically the same, except I did keep some FUTU, some FUTU short. Definitely a little bit of a dangerous one, but I'm up a lot in the name between yesterday and today, so I did keep a little bit. We'll see. Still a lot of extension on the daily. We can take a look at it. So kicking it off with the market here. So the market, kind of a nothing burger of a day. There was actually, I almost felt like, even though it was pretty range bound and the overall range of the day wasn't huge, 565.50 SPY low and 569.80 SPY high. Yeah, it's an okay range, but definitely range bound. Yet at certain points today, the market felt like it was moving very fast and loose. Could simply just be a Jewish holiday, so less market participants, less liquidity, and as we know, we're also in a little bit of a period here after the end of September where the market can trade looser insofar as just kind of the gamma level of the market. So it certainly felt like there were some bigger movements in here, and we had some pretty good trades, I thought. Some thanks, Rich. We had some pretty good call-outs, even from an index level, like Rich is mentioning here, called out this short at highs, was a pretty good trade, and then I think I called out this retracement short here at 10:30 that worked okay to a new low. Then I called out another short at 10:45 that was a little bit premature, and you may have gotten stopped out because it actually ticked this high by a penny before it broke down. So there were some, kind of some fast movements here with the SPYs, but overall, kind of a nothing burger of a day. If you pop over to the daily chart, nothing has changed. Is it an inside day? It is an inside day. So inside day for the SPYs by a little bit. So it's an inside day, still right above this 21 EMA. This 21 EMA and the low from these last couple of days is important for bears and bulls, I guess. Bulls need to hold it. They want this to be a little bit of a deeper pivot low to the 21 EMA that we bounce off of to new highs for trend continuation. Bears want to break it and lose more support levels and get below these moving averages and have these moving averages cross and potentially get to price areas where we can lead to a feedback cycle of selling in the market. Qs, pretty much same deal. Not quite an inside day for the Qs, but pretty much held this 21 EMA, held those lows for the last couple of days. Bulls need to hold that. It's been a QQQ pullback of around $17 or so, just eyeballing it super quickly. So it's been a decent pullback. Bulls want that to be it. They want that to be the pivot low off this 21 EMA where we bounce off it, create a higher low in this pattern, and make new highs. Bears want to lose that. Same deal. Get below these moving averages, have them cross, go into feedback cycle of selling. So that's kind of the battle. IWM still relatively weak, is below 218. So whereas the SPYs and the Qs are not giving the bear confirmation at this point in time, the IWM kind of is. It's below 218, which is the level that I was saying was more of the key level. Below the moving averages. This 80 EMA is pointing down. They're near crossing. So, a little bit of a mixed signal from this market. I just want to review quickly what I was discussing in the morning meeting again, because I felt that it was pretty important. A lot of it came off of Pat's note. So Pat's note today, excellent, giving us a lot of data from two of my favorite people to read in the industry, which is Rubner from Goldman and Charlie McElligott from Nomura. Definitely, I said in the morning meeting, if you're part of the team, make sure that you read this. Basically, he lays out his thought process for the market, which is pretty much the same thought process that I have, which is a lot of potential weakness here in October that then gives way for strength into the end of the year. So starting with the short term, where's the bearish thesis kind of come in for the month of October? It's from a few different points. So some seasonal weakness, especially with an election year, is one. He talks about how the systematics are you can see it right here. Systematics aren't maxed out, although vol control considered on its own might be. But you can see basically with these above mentioned charts that they're very heavy to the long side. So the risk I think on these systematic funds is there more room for the CTAs to buy a little bit, but the risk is definitely an unwinding. It is a bigger downside risk of heavy selling coming in at certain trigger points than it is new buying coming in for sure. And you need to just know where those potential trigger points are that can take this market down. You combine that with, he says, hedge funds may need to take down exposure given elevated volatility, elevated election volatility. And also the mutual funds have their end of the year actually in October. Somewhere in this note he says it actually perfectly lines up with Halloween. That doesn't necessarily mean selling, but sometimes that can lead to similar to what we see also in December, like tax loss harvest selling, where the weakest names actually get sold down further, just for tax loss harvesting purposes. So he kind of views the positioning risk to the downside. That trigger, if you look at where is it? Different area on the charts, maybe. Scroll down here. Yeah, this chart. That SPX short-term threshold for the CTAs, where the systematics will begin to sell, this says about 2% lower. So, 2% lower from where we were trading this morning brings you to about 5,600. The last trigger number I had seen, which is now a little bit dated, was 5559, 5,559. That number should be a little bit higher now. So I think it's somewhere around the 5,600 area is where that systematic trigger should be, probably a little bit below that. And then what I was saying in the morning meeting is if you can combine that, and this chart tells you even a little bit, but I like to look at this chart from Charlie over at Nomura. If you combine that with this chart of understanding where gamma flips, there's actually a lot of positive gamma at this, like right in front of this 5,600, which could create some support for the market. But if you're able to break through that 5,600, then you have downside acceleration through 5,600 on dealer short puts. So that negative gamma really comes into play. So circling that back to the market, this is what I was talking about this morning, is one thing we certainly need to recognize. When you're in these environments where the positioning risk is to the downside, you still need something to cause that to trigger. Selling that comes from an event, maybe non-farm payrolls tomorrow is just an example, maybe not, or maybe it's just going back to what I was saying before about hedge funds de-risking into the election. You need a reason for the market to actually be able to get down to those points to begin with that can trigger the forced selling. Markets work in feedback cycles. They work in feedback cycles where buying leads to more buying. That's what creates an uptrend. Markets work in feedback cycles where at certain points on the downside, selling leads to more selling. Like a simple example you can think about is just, I have some longs on and maybe I have a stop loss out at those longs. Well, my stop loss is selling. That selling causes the market to go lower, and maybe that gets to Dennis's stop loss, and that selling then gets to Rich's stop loss, and that selling gets to Cameron's stop loss. That's how kind of feedback cycles of selling work. But you still need the market to actually break down either technically or through some sort of an event to actually get to that point. What I highlighted in the morning meeting this morning is that there are other periods of time this calendar year where the positioning risk was to the downside, but that doesn't mean that you have to break. I remember, into the end of February and then throughout pretty much all of March, We were in a period of time where I was nervous about putting on a lot more new long exposure because I felt that that positioning risk was to the downside. And finally, but only in the beginning of April, after we continued to grind higher for over a month, did we actually really get the sell-off that washed out that positioning a little bit. That positioning got back up to like the, systematics at 99th percentile, I think somewhere by the end of June, definitely by highs in July. And it was the same thing. You're able to continue to move higher sometimes, but the risk becomes to the downside. It doesn't mean that you have to go. It just means that if something happens that can trigger that move lower, then you can get the real unwinding feedback cycle of selling that actually comes in. And it just seems to me that we're at another one of those points right now. And we're at that point where it is the month of October and there's no corporate buybacks going on. And the CTAs aren't buying in the same way. The vol control funds aren't buying in the same way because they're fairly maxed out. And you may need to see some de-risking into the election. So if there's, one number that the market doesn't like that sells us down a little bit, which can definitely happen, especially after all that gamma at the end of September already rolled off that was pinning us at that 5750 level, if something happens event-wise that triggers us lower, or just because there's enough selling from funds or whatever that triggers us lower, you could find yourself easily in a feedback cycle where we see heavier selling at certain points in this month of October. But the key point that I'm trying to say is this is not like an all-out bear call. It's more like a yellow warning signal. Like be very careful and cautious on new longs for anything that's more than a day trade. Recognize where the positioning is. And also, I want to be able to be prepared that if those downside triggers actually occur, I want to be prepared to actually take advantage of them. And that was one of the things I spoke about in an afternoon meeting, I think even like a few weeks ago, might have been when I first got back from vacation, about how it's only happened a couple of times this year, but usually whenever that first like SPX sell trigger hits, that is like the first level for the systematic funds to begin to sell. The couple times in which that did happen this year, they were, I don't even want to call them like momentum down days, because I feel like momentum is the wrong word, because the selling felt like very in control, but it was very in control and very, very steady and lasted for the entire day. Those have been the types of days where you just get selling that just rides down on like that ADMA on the 5-minute and literally lasts for the entire day. So bringing all that back to kind of where my thought process and my approach is right now as we are in the month of October is I'm still nervous about the market. I've been nervous about the market. I'm probably going to continue to say that until we get through the election. But I've still got longs on, but I also have shorts on. And the cool thing is that they actually both sides have been paying me pretty well. But I'm implementing that strategy where it's like, as we move higher, I'm lightening up on those longs and adding to those shorts. As we move lower, I am buying back some of those longs and covering some of my shorts. But recognizing that at a certain point, if that 5600 level were to trigger, I will very quickly switch from, or maybe you'd have like two trades going on simultaneously, where then instead of continuing to cover my QQQ on the way down, then I'm actually going to want to add in like a very big way for that more momentum style trade of the feedback cycle of selling coming in, to learn from what I did not do as great of a job in previous circumstances this year, which is to be able to really take advantage of those heavy sell days where, in hindsight, they always look so easy. It's like, wow, we triggered the, SPX CTA short-term trigger level when they're, fairly overbought, and then you get that super, like, algorithmic, systematic looking selling on the ADMA all day, and then, here I am, like being really patient, waiting for periods of time where it extends to be able to take like a cute counter trend long trade to try to make a very small amount of money for myself on these quick occasions. And I actually was able to do a decent job with that. But what if I just shorted the damn thing instead? And what if I didn't just short the thing, I shorted it and I added every single time we, touched that ADMA on the 5 and just, shorted and shorted more and reshorted on those bounces into the ADMA over and over and over again. The profitability and ease of that profitability based on those recent circumstances where we saw those breaks would be huge. So, that's entirely where my head's at. I'm certainly not bullish. I wouldn't say that I'm an outright bear either, even if I've maybe been sounding that way a little bit recently. Recognizing, though, that there are trigger points now out there in the market that could really lead to feedback cycles of selling, but recognizing that they have to trigger, and that there have been periods of time, like I just showed, where we're in a similar-ish situation, something that kind of rhymes but maybe isn't the exact same, where we still held up for over a month, after that happens. The difference here is I think that the window is smaller. Where if we get through the election without like a real break lower that creates that feedback cycle of selling, then I think that we'll at that point need to kind of take a half step back and re-examine the updated data and kind of where we're at with things, because similar to Rubner and his thought process in the note that you should read, I also then become very bullish into the end of the year this year for a variety of reasons. One is just because throughout the history of my career, I've seen every election cycle play out the same way, which doesn't mean that this one has to also, and so far it actually hasn't. But every election cycle I've ever seen, presidential election cycle, we sell off into it and then we buy up after it. And I've said in the past, I don't care, put your politics aside for a second. Let's think about making money and not who you want to win for president. I've seen Democrats win, I've seen Republicans win, and I've pretty much seen the same result happen on every presidential election, which is that we sell off into it and then we buy up after it. And it's more just fear of the event than anything else, fear of the uncertainty than anything else, and then we get bought back up. And then if you combine that with the timing of the election at the beginning of November, well, what happens in the beginning of November? We go from October right now, where we're in a corporate buyback blackout window, to November, which is typically the biggest month of the year for those corporate buybacks. And if we could get the sell-off in October, that would make me even more bullish for November, because it would do the same thing that happened in April and the same thing that happened in July, August, where it unwinds a lot of that systematic exposure, and then as you move higher, that systematic exposure buys with you and creates that bigger upside move. So, again, we'll see what happens here in October, but in some ways, the more we could sell off in October, as long as it's not like too extreme, as long as we can, if we can have like a decent little 5-7% pullback or something like that in the SPYs, I think that actually then sets you up for an even better end of the year period, because you wash out some of that long exposure and then it enables you to go back into it. So that's pretty much all I got. I could talk a little bit about some trades that I was in. I tried to buy SMR today. The idea was wrong. It totally failed. I was able to salvage the trade a little bit, but it wasn't really good trading. I traded Tiger short very well. I traded Futu short pretty well. I had the yin long short overnight last night and covered the entire thing pre-market for a really nice profit, and then never traded a share of it again for the rest of the day. So it was a pretty good actual trading session, I thought, for me again today from a day trading perspective. We had a really good NVIDIA long call early in the day that led to a really good NVIDIA short call. Pretty much at highs. That was great on both sides. Micron long, I think some of you guys were focused on in the beginning of the day, which was also a good trade. So there's some good opportunity out there. That's all I got. I'm happy to answer any questions that you guys have. From Dennis, I mentioned it to Pat earlier that we made a little mistake today going after NVIDIA's 5-minute extension instead of the SMCI extension. Oh, on the short side, you mean? Yeah, SMCI, you definitely have some more benefits on the daily chart with, more negative sentiment with everything that's been going on with that stock, whereas you know, Nvidia is just a leader here, and it's back above the key 120 level. So yeah, sure. Basically ran with Nvidia, but is a much weaker ticker with decline. Yeah, for sure. I totally agree with your thought process. We're still a really good short in Nvidia up there, but definitely agree with your thought process. Why short strength when you can short weakness? From Tate, what are the chances they front run the election rally by a week or so? It's definitely possible, and if you read the Rubner note, he's not bullish starting the day after the election. It actually says in his note that he's bullish like starting October 27th or 28th, something like that, which I think would correspond actually more with like a week in front of the election, where maybe you're right. Maybe they begin to front run some of that uncertainty a little bit. It's hard to say. From Jerry, could you touch on high-speed scalping like you did yesterday morning pre-market on Tesla, specifically methodology and thought process and risk management, since technicals are less relevant at that stage? Sure. So when it came to my Tesla trade yesterday, I didn't really put on a new trade pre-market when the news broke on Tesla. I was already swinging it with a preset game plan. So I didn't add as a new trade. I just had a preset game plan that I needed to follow, and the stock was moving so rapidly, and I had already loaded up at the same time, absolutely loaded up, short, Futu, Tiger, Yin, JD, and Baba. So I was so busy yesterday morning because it was like I, shorted 5 insane Chinese stocks because I had a lot of conviction there. And then at the same time, I have a swing on in Tesla that's reporting its car sales numbers at 9 a.m., which is also exactly what I'm supposed to be getting on the airwaves here to do the morning meeting. So it was just a matter of me actually just trying to keep up with my positions. So I'm able to trade. I trade very, very, very fast. I'm not like a technology guy at all or anything like that. But once upon a time when I was younger, I was pretty good at video games. So I have those reaction skills still from when I was younger. And I grew up in a time of trading where when I first started trading, it was actually all about speed. Speed was, I think, a lot more important when I first started trading than it is now, especially with the way that we traded, the way that I traded back then, which was a lot more hyper scalping, a lot more tape reading scalping, and having to have super fast reactions off things that you saw on the tape, and being able to beat other people to stock and things like that. So I'm like very, very, very fast with the keys, and even with that, trading 6 in-play stocks that are moving rapidly at once on top of my other, 10 or 15 positions at the same time that I still have to manage, was like pretty much impossible yesterday morning. I could not keep up with things. I did a pretty good job, but I couldn't fully keep up with things. So couple things. One is having a preset game plan, right? I know where every bid and offer is supposed to be for all of my trading on everything I'm doing. On my Tesla core position, it's very simple. I am shorting and then covering smaller amounts of stock every on $1 increments, right? You hear me talk about my cash flow approach with the $1 increments. So I am shorting and buying back the stock in 1 cent increments. So let's see, even today a little bit in Tesla, I struggled to keep up at certain points, but just look how clean my Tesla execution dots are. Look at 449 here. Short sell dot, short sell dot, short sell dot, short sell dot, short sell dot. Look at 448 here. Cover dot of that short sale, 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 cover dot of that short sale. And then the same thing. I was shorting at 448 to be covered at 247. I was shorting at 247 to be covered at 246. I was shorting at 246 to be covered at 245. Shorting at 245 to be covered at 244, and just working that range. Like you can see here, Like, the stock had a nice puke down, so I'm covering some at 245, I'm covering some at 244, I'm reshorting it at 245, I'm covering it at 244, I'm covering 243, I'm reshorting 245, I'm covering I'm reshorting 244, I'm covering 243, I'm covering 242, 241, 240, 239, reshort 240, reshort 241, cover 240, cover 239, covered 238, reshort 239, and then this is the end of the day, so I canceled the offer because I would prefer not to have extra swinging stock that I don't want to have. But otherwise, you would have seen me reshort more here and more here. So I already know exactly what those game plans are. So the second that I see the executed order highlight in my orders window, which is on my other screen, and compliance doesn't like me to share that screen, so I can't really do that. The second I see a new order got highlighted, I am, as fast as I possibly can, typing up Tesla and pressing my hotkey for my bid button if an offer just got filled, and utilizing like I've talked about in the past, like about if I was trading SPY, I can bring up my bid key here for 100 shares, and I know that if I like with Tesla, I'm doing in dollar increments, I can move this by 10 cents at a time. So if I just saw that I got filled on the offer, and then I'm supposed to be at just basically a dollar lower, then I'm there, and the order's out. Like that's how fast. I guess it's too far down in the tape and you can't see that order, but I just put it out in the market, which I'm going to cancel. That's how fast I'm able to get those orders out. It's like seconds basically. So all I'm doing there is following preset game plans. There are other times, like Qs aren't a good example because there are other times, like with Nvidia today, where I'm like, all right, I was already trading it short. I started early, but you can look at all these sell dots here because I sized up on that as more of a scalpy type of trade. And, Pat was doing it with me at that point, and I really sized up. And then you could just see the litany of covers all the way down. That's also, just speed, hotkeys combined with just knowing my game plans inside and out to be able to execute them very, very fast. So. Hope that helps. From Jerry, by cover, you are putting in buy stops on shorting that fast? No stops. No, cover just means that to cover means to buy back short. So I'm already short, and if I'm buying back short, the proper word is that you're covering your short. So I'm not using any stops. I have no stops. In Tesla at all when I traded it yesterday or today. I have no stop out. I am just having my offer out at my predetermined incremental price, and then getting my bid out at my predetermined incremental price again, as fast as I possibly can. Because when you have it moving as fast as it was, you can't even see it in my 5-minute chart. Maybe you could see it in a stupid 2-minute chart, but I don't like to look at 2-minute charts. But this, you can kind of see it a little bit, because in the 5-minute chart it just looks like one big red sell bar almost. Wait, that's not the right day. Hold on. Where is it? Hold on, let me do this again. Where is the right day? I need to find it. Which was that? That was yesterday? That was yesterday, right? Yeah, so what am I doing here? Let's go to 2 hours and yesterday. Zoom. I need the pre-market first. No. Wow, I'm just losing my mind right here. No. What am I doing? How did I just forget how to bring up my pre-market chart that I do constantly? Oh, there it is. Cool. Boom. Okay, this is today. I never look at 2-minute charts, that's why it looks so wacky to me. Now I want to zoom on yesterday pre-market. Like, this thing was, like, think about it, right? I already had those bids out. stock trading at 259. It even actually spiked to 260 super fast. I remember that now because I'm looking at the chart. Data comes out. I'm trying to do the meeting. The data comes. Instant drop down to like 256 or something. Instant. So I get filled 59, 58, 57, 56, all literally in the same second. At the same time, I had an offer out at 260. And that 260 offer, I think, gets filled. Yeah, it gets like filled basically. It might even been below that. No, actually, yeah, look at this. This chart's real. It ticked all the way down to 252 in this first 2 minutes. So I got filled bids all the way down, every dollar down to 252. And then, next thing I know, I'm getting filled on the offer at 260. But that was so fast that it's like, I just got filled on all these bids. I couldn't get my offer back on 253, 54, 55, 56, 57, 58, 59 in the exact way that I just showed you that I was doing on today's trading session. It was more like rampant, like, all right, it's already back at 258 and I'm getting filled at 260. I was supposed to be offered at 53, 54, 55, 56. I gotta, whack all those bids. Like, I'm just going to hit the bid there because it's already trading above where my offer was supposed to be. So I'm just going to hit the bid. But at the same time, I already also just got filled on the offer at 260, which I'm supposed to cover at 259. So then I'm like, oh my God, what do I do? It's trading at 257. I was supposed to short from, 253, get offers out from 253 to 259. I didn't get any of them out, but I got filled at 260. So that's a lot of like quick math in my head of like, all right, I'm going to count the 260 fill as basically my 253 fill. And now if it's trading at 258, that means I need to short 1, 2, 3, 4. I need to short like 5 additional increments at this price and then get all those bids back out. Like it's just so fast. And then at the same time, trading Futu and I lost the chart, but trading Futu and trading all those other stocks at the same time was just crazy. Oh, man. But, yeah, Jerry, I hope that helps. What do I think of JOBY? I'm still in it. I don't like how it traded today. I'm going to use the inside day low as my stop tomorrow is my plan. And at the inside day low from today, I will still be slightly positive in it. I'm just really, really, really hoping it doesn't gap below today's low tomorrow. That's the only thing I'm worried about. I still have kind of a lot of size for that name, and it traded very poorly today. But as you know, when I'm in the money, I tend to be pretty greedy, so I'm really trying to let this thing breathe, and I'm giving back everything that I made, but I don't want to lose money in it either. So I want to use the inside day low pretty much as my stop, and I'm really going to hope that it doesn't gap below that, because then I'll be in a spot that I don't want to be in and potentially end up being red in it, which I definitely don't want to have happen. But I was never, between the 2 days, fully net red in it at any point today. So we'll see. From Jim, I had to step away for a minute. Not sure if you already mentioned it, but how are you setting up your hotkeys to fill your limit orders? Do you have an automatic key to buy and sell every 10 cents, or which increments? No. So I showed it real quick, but I'm happy to do it again. Just bringing up SPY as an example. My bid and offer hotkeys are set for the inside market. So just press my bid hotkey, and it just immediately came to the inside market. And my left and right arrows, they'll change it by a penny, which can be fine sometimes. But if I press shift left and shift right, it changes it by 10 cents. It's like in an example of Tesla where I'm trying to buy and sell every dollar. Let's say I just got filled on the offer on the way up at 567.50 on the way up, and I want to be bid $1 below that. I'm instantly gonna bring my big box out and I'm out. So that's how fast it took me to get the order out. The whole amount there that you just saw, and actually sometimes I can do it even quicker if I time it like that. Like where so like I can bring this bid box up and I can click left arrow, left arrow, left arrow, and I know I need to get all the way down, so I can like rapidly jam on the button. Or if I know it's got to be a whole dollar down, I can just kind of hold it, and a lot of times, just because I've been doing it so long, I know by holding the button just about how long I need to hold the button down timing wise for it to be down like exactly $1. So I can get those orders out. Even on the wider increments are always going to take longer because I got to drop the bid or bring up the offer from the inside market by a full $1. Whereas if it's a cheaper name and I was doing it on 10 cents or 25 cents or something like that, then it's super fast and super easy. The $1 always will take a little bit longer, but I can still get it done, you know, pretty quick just with the shift arrow hotkeys there. No problem. Popping over to the YouTube. I gotta sign into it first really quick. See if there's any questions over there. From Uvixiville. VIX up $1.50 even though we just went sideways today. I like Uvixi long tomorrow if the numbers are bad. Yeah, I mean if the numbers are bad, the market sells off on them. VIX long, market short is where it's at. I still have, you know, small Uvixi call position on that I bought on the first, like at the open. So I sold a little tiny bit of it today. Just to now I'm in a situation where if what I have left were to expire worthless, I'd still be positive in it. So what I have left, I'm just going to kind of be really greedy on and let it ride because it's like a win-win situation. Thanks for the question, Uvixi Bull. All right, folks, anything else? Otherwise, we'll wrap it up for the day. Cool, all right. It was another exciting day. Hope everybody did well. I will see you all tomorrow morning.